Hello, Team 201, and welcome to our quick discussion on the purpose and objective of financial reporting. So, what is the point of a framework? Well, the framework is something that gives us common ground to work from in financial reporting. And what do I mean by that? Every one of us, every financial reporting student, every chartered accountant in practice is a unique individual. We each have our own views of the world. And dependent on those views of the world, that will define to you what is important to you, which will influence what information is important to you to share with the world in financial reports. The problem with this diversity and this kaleidoscope of information, though, is if we leave it up to every individual who's preparing a financial report to make decisions about what is important and how they're going to disclose it, there's going to be a kaleidoscope of financial reports. So the problem with that is you might have an investor, or you yourself may become an investor or be an investor. And you're considering an investment and you have two companies to choose between. Let's say company A and company B. You will need comparable information with those companies to be able to make an informed decision. You want to compare apples with apples so that you know which one will be the right place for you to invest your money. And the problem in financial reporting is if we leave it up to every individual, company A's financial reporting team or company B's financial reporting team might make decisions that are vastly different from each other and give different information. And then you'll be sitting with these differing sets of information, not knowing how to compare them. And that causes a challenge in financial markets because that's not going to be very efficient for you as an investor now to make a decision. You're going to have to go and adjust things and try and work out what is comparable so that you can make an informed investment decision. So the role of the ISB and the role of the conceptual framework is to help all professional accountants and those in the financial reporting and the finance communities in the world come to a collective understanding and agreement of what we feel as a body of people is important in terms of financial information and provision of financial information, how we should do it and what we need to share. So that's what the framework does. So on that background, role play for a moment that you will become a board member on the ISB one day. Many South Africans have done that role and played a very important part in financial reporting. So you'll jet your way to London, you're going to walk into the ISB's boardroom and you're going to sit down at the table and you're going to make decisions with 10, 20 other people around the table about financial reporting for the world. Now, these people come from very many countries, so they'll have different cultural backgrounds to yourself, different views of the world to yourself. That can make that discussion very difficult because you all may have very different ideas on what financial reporting should be. So that's where the framework comes in. When you walk into the boardroom at the ISB as a board member, you are going to set frameworks based on, or standards based on this collective understanding of financial reporting. That is the framework. So that helps us all work from the same page when we're making decisions about how to present property, plants, and equipment, or how to measure inventories. Now, something that is very, very important. That being said, you might be wondering, but that doesn't really sound right. I mean, I am entitled to my own opinion, and yes, you are. So there is process in coming up with this collective opinion where you can contribute. And even now as a student, you can already contribute. If you go onto the ISB's website, there's going to be a thing called call for comments on the new standards. So you as an individual with your views of the world can now comment on a standard and say, this is how I feel this should be accounted for based on this, this, and this. And this is my view of the world, and this is what I want to achieve. So you can play a role as an individual with your views of the world in influencing the future of financial reporting. But we need, for comparability's sake, to have a collective view, to speak from the same sheet, to ensure comparability now in the markets that we can allow investors to make efficient decisions that don't cost them too much money to make those decisions. So that's what the framework is. The framework is generally agreed document of principles that we base financial reporting decisions on. It took many years to get the framework where it is now. The first framework was issued in 1989. Then the ISB and the Americans sat together, and they have been discussing how to improve the framework. Then the Americans decided to go on their own, and the ISB and the rest of the world then carried on the process and ultimately issued the 2018 framework. So what is that 2018 framework? It is the culmination of a process where individuals raised their views of the world and their opinions, and collectively we came to an understanding of what financial reporting at the moment should be like. It is something that will evolve in time, and you will still play an important role as a professional over your careers in shaping the future of financial reporting. It will not stay static where it is now. So that, in a nutshell, is the purpose of the conceptual framework: to be a set of generally agreed principles and concepts that inform our decisions in financial reporting. So you're sitting there thinking, oh, come on, be real, I'm not going to be on the ISB. And as I said, many South Africans have already served on the ISB and on the IFRIC, which is the interpretation of the ISB, and we will come to chat about that in more detail at a later point. But apart from being on the board, just being a preparer of financial reports, you need the conceptual framework. And you need it for two reasons. The world and the economy in the world is evolving so fast. There are new developments almost every day. And the ISB cannot have rules for you as a preparer of financial statements for every single eventuality. A client of yours might have something very unique, and you're going to have to decide, how am I going to report this? And to ensure there's going to be comparability in the way you make your decision, you're not going to go to your personal view of the world. You're going to come to the conceptual framework. Because there might be a person in Germany or a person in China or in South America that has a similar challenge. And investors then might consider your three companies against each other for possible investing. And if you three then make your own decisions based on your own views of the world, it's going to be very hard for those investors to compare these documents. So the three of you, being in IFRS countries, are going to work from the same conceptual framework. And the hope then is, if we work from this common document, that the way the three of you will then account for this unique economic event is going to be very similar. And that will be enabling your investors to decide in which of your companies to invest. So that is one instance where there's no accounting standards, that you will need the framework. Another instance that you'll need the framework is if you're reading an accounting standard and you're trying to interpret what the ISB intends you to do with these rules in one of these accounting standards. To help your interpretation, you take a step back and you think, okay, from what was the ISB working? They were working from a conceptual framework. So this was their views of the world. That will help you then think, okay, so if I want to account for this economic event based on the framework, you almost put yourself in the shoes of the board members. They work from this document, you work from this document. And hopefully that's going to help you understand where the ISB got to in establishing their rules. So that is why the conceptual framework is such an important document. And you'll see during any contact with me where we're learning about financial reporting together, the framework will get mentioned time and time again, because it's so important to you understanding it. Financial reporting mustn't be just about learning rules like a parrot. There are too many rules. I mean, we're over 1,000 pages with IFRS. The US GAAP, that's the comparative standards in the US, it's into tens of thousands of pages. You cannot learn all of that rule by rule. So what you need to do is to learn the skill of interpreting standards and then applying them. And that is where the conceptual framework is so important, because you're going to constantly come back to the framework and think, okay, how did they get to this rule? Then the rule will hopefully make more sense to you. So part of the objective of financial reporting now that we've generally agreed in the world is that we want to provide useful information to people making decisions based on that financial information about an entity. So there could be many parties making decisions about an entity. They could be making decisions to invest in an entity. It could be employees deciding, should I take an employment contract? Should I ask for a wage? It could even be pensioners that are interested in investing their savings in your shares to get a return for their pension. So there's very many users that are interested in financial reporting. There could even be environmentalists that are interested to know what your company is doing to protect the environment. Now, each one of these parties that we've mentioned might have very specific needs, and it'll be very hard to meet everyone's unique needs. So the ISB has collectively decided, and the accounting profession has collectively decided, that we're going to focus on investors, lenders, and other creditors. And if we meet those people's needs, hopefully we'll meet a lot of the needs of other people from the financial reports. So when you're setting a financial report or you're making a decision about what to disclose or how to measure something, you need to step back and to think, who are the users I'm targeting? What will their information needs be? And in our instance, then, regardless of our view of the world and who we think is important for our financial reporting in terms of IFRS, we need to say, okay, what would investors, lenders, or other creditors find useful? What can I give them that will influence their decision and help them make an efficient investment decision or lending decision? So at each of these short videos at the end, I just want to start with this blank page, and we're going to populate it over time in making a financial reporting decision. So I am faced with some other economic events that I want to now communicate to users of my financial reports. Where am I going to start with this blank page? Well, the first thing I need to think about is who's going to be using whatever I put down on this blank page. Once I know those users, then I can move on to the next decisions.